It's time for the Financial Crisis Talk Center with Ken Gross and David Einstandig from Thav Gross.
Credit card debt is number one. I view it as financial cancer.
40% of your gross income is going to just pay the debt service. You got no chance of getting out. I would give up my credit score to get rid of debt.
Here's your host, Ken Gross.
All right, welcome back to the Financial Crisis Talk Center. This is segment 2 of a 2-part story on money. So this is money part 2. We're recapping things that we've learned over the last 6 years on the Financial Crisis Talk Center because we're shifting to Law and Reality on Saturday, September 6th for the radio version of the show, and on Sunday, September 14th for the television version. So what we're doing is we're taking last segment and this segment and kind of recapping, not in a case study, but just the things that we've learned. So I want to kind of, because we've gone through 301 episodes of the show, and so I think we've learned a lot. I'm going to just kind of throw them out there. We'll talk about them as we go. What is good for the goose is not good for the gander. And what that one is, what is good for the U.S., who's the goose, is not always good for the consumer, who's the gander. Do you know what I mean by that, Brian? Or do you want me to tell you?
I would love for you to tell me.
That sounds like a little My Cousin Vinny kind of a thing. I would love for you to explain to me why
the goose and
car
the gander,
was
please.
a different tire.
Absolutely.
Consumer spending drives our economy. But in order for consumer spending to rise, there always is an increase in consumer debt. When people are taking the plastic and going to retail and charging the TVs and the radios and the fancy jeans and the nice shoes and driving up those credit card bills, that's good for the economy because the GNP grows, employers make more money, they hire more people, everything goes great. That's what drives our economy is consumer spending. The bad side is the consumer ends up getting into more debt. What we've seen in the last 3 years is a reluctance of consumers to spend and an increase in savings, which is smart on the consumer end, but bad on the goose end. The U.S. economy doesn't grow at the pace that it wants. It's just a difficult issue that we have to deal with. I don't have a solution to the problem, but it's one that we need. It's just something that we've learned that we need to be sensitive to and we need to watch as we go forward. Now, in that same light, another little adage I think that we learned, and that's the experts don't know very much. That's what I've learned in watching this over the last 6 years.
I think that's translated to statistics don't lie. Because statistics can say anything you want them to say.
Yeah, so they're not lying. They're just whatever you want them to say. I mean,
the pundits know everything.
Think about it. The pundits completely misread or didn't identify in 2009 and 10 how important the housing industry was to the economy when it fell apart. They were talking about manufacturing and the banking industry and finance, and they were kind of ignoring housing until housing finally started to pick up. And when housing started to pick up, the economy started to grow and things got better, but then manufacturing slumped. They didn't really start talking about what a major impact on GNP housing had until we got all the way to 2012.
It's funny
that to me was ridiculous.
We've been talking right here on this show since the day it started about how important housing is.
Yeah, because it's not just the house. It's the title company. It's the guy who grows the trees. It's the carpenter. It's the lumber yard. It's the Home Depot. Nobody's going to go and fix up and repair their home when it's $150,000 underwater. Now that the houses are coming back up, Home Depot started, everything drives on the housing industry. So we watched that. We also watched all these experts say, we will never again see anything better than 1% growth in residential real estate markets. That's what they were saying in 2010. That proved to be completely false. It may be in the long term correct, but it certainly wasn't true last year, and it's not proving to be true this year. The other thing, this kind of goes with your statistical statement, Brian. Reports come out, and then they're revised. So, they come out with a report, they write all these things about what the report means, and then the next week we get a new report saying those numbers were wrong, but they don't bother redoing their story. The stories are based upon false reports. So that's just something we've learned.
Check out the news every single day. That's exactly what happens. Unemployment was up. Oh wait, no, unemployment was down. Consumer spending is up. No, it's down. We had growth in the first quarter. No, we had a recessionary quarter. It's absolutely ridiculous, and these guys don't know a darn thing.
Time to move on. This is one of your favorite ones. Okay, I see you got excited about the last one, but this was the one I was more inclined to think that you would get excited about. It's not about your credit score.
I love that.
What do we mean by that?
Well, the bottom line is the average American believes that their credit score is some sort of badge of self-worth because the credit card industry and the economy is predicated upon you. If you have a good credit score, you can borrow money. If you can borrow money, you are a good citizen. That's what we're taught. The reality is that if you have cash in the bank, your credit score is meaningless. And you don't need credit. You shouldn't be using credit. And if you harm your
little carried away, I wouldn't go say it doesn't mean anything. If you're about to go buy a house,
yes,
your credit score means something.
If you want to get a mortgage,
right?
But at this point, it's a huge number of cash purchases in the housing industry right now. So in the mortgage market, so
you're not going to tell someone to go out and spend $350,000 cash on a house if he doesn't have $350,000 of cash.
But here's what it's not about your credit score means. If you're in debt, you've got $40,000, $50,000 worth of credit card debt, and you could get rid of that debt, you're going to temporarily harm your credit score.
Yeah, you take a short-term hit in your credit score. Here's the things that I've heard you and I say over the course of the last 6 years. Ask yourself, what do I need my credit score for? If you need it for something short-term, take care of that first. You can't leave your credit score to your children when you die. You can't spend your credit score when your Social Security is not enough to make ends meet. Planning resolves that issue. You'd be much better off taking a short-term hit in your credit score and getting to 75 with $1 million in the bank than getting to 75 and being able to pound your chest and say, I've had an 825 credit score all my life, but unfortunately I only have $7.85 in the bank. And I have to live on $1,950 of Social Security for the rest of my life. And rent costs $2,200.
With the new FICO system that we just discussed a couple weeks ago, it's going to be even more
FICO 9.0.
Even more beneficial to you to get rid of your debt because your credit score is going to come back that much faster.
Absolutely. We're coming to a break. Next one, I want to focus a little bit on things we learned about housing and mortgages. We'll be back after the break.
Carrying too much debt? Resolve your debt. Call Thav Gross.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call Thav Gross. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP.
You like your job. What you don't like is the way your boss has been treating you. He's making comments about how you look instead of your work, and he's been touching you inappropriately. If you complain, is he allowed to fire you? Absolutely not. Unwelcome sexual comments, advances in contact are illegal in the workplace. Make him pay. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
Is the debt piling up? Struggling to get by?
It's all about preserving future income. Bankruptcy is one option. When it's right, it's the least costly, most effective way to save your home, eliminate a second mortgage, and wipe out credit card debt. But you need to address the problem now.
We help people with bankruptcy. Call the experts.
We're Thav Gross. Our firm will solve your problem.
888-235-HELP. That's 888-235-HELP.
Every family has the family meeting, and we all know what that means. Dad's got dementia. What are we going to do? What's the care plan that the family has in place? Usually they don't or they struggle with a care plan. When you go home tonight and you talk to your tax person and you talk to your financial person, say, what's the plan that you have in place? And as soon as they don't give you an answer, give me a call, because I can do it for you.
Change is good. The Financial Crisis Talk Center is shifting to Law and Reality. Sunday mornings at 11 a.m. beginning September 14th, Law and Reality will cover financial issues and all legal issues. We're going to tackle what you need to know. Okay, we're going through things that we've learned, other things that we've learned. You can modify your mortgage if your gross income times 31% is less than your mortgage payment. Your mortgage payment is principal, interest, taxes, and insurance. It's a pretty simple mathematical equation. If you multiply those numbers and the product is less than your current mortgage payment, you're basically HAMP eligible and you have a very strong chance of obtaining a loan mod. If you don't fit into that formula, it doesn't mean that you can't get a loan mod, but you don't fit within the HAMP program. You have to fit within one of the lender's other standards. But it's pretty straightforward. It's just one of the things we've learned. I don't want to get hung up on it. Next one. You can combine a Chapter 7 bankruptcy with an underwater house to create a walkaway option. I would say that's one of Brian's favorite things.
It is absolutely one of my favorite things.
So
to be able to...
in less than a minute, explain it.
If you file a Chapter 7 bankruptcy, you eliminate your personal responsibility on the underlying debt of your mortgage. If your house is underwater and you're never going to have the ability to sell it, but you want to keep it for a while, you keep it, you pay for it, and when you're done and you want to walk away from it, you literally do just that.
The one thing that's important is that they don't reaffirm the debt. I see a lot of people come in and for some reason in a Chapter 7 they've reaffirmed that debt.
Yeah, we don't let our clients reaffirm mortgages. It's basically tantamount to malpractice.
It was happening back in, I would say, the pre-financial crisis era, but even then, it wouldn't have happened in our office because it never made any sense. There's never a reason to reaffirm a mortgage debt because if you continue paying, you get to keep the house.
Yeah.
Just, I think it's not tantamount to malpractice. It is malpractice. It's insane for that to happen. It's a good point, Jenny, because we see the problem come up. Another one, you can use a Chapter 13 to lien strip a second mortgage.
Another one of my favorites.
You actually mentioned that in the prior segment, but quickly, what does that mean?
Remove your second mortgage from your house. Treat it as a general unsecured debt because your second mortgage attaches to heir. There's no equity to protect the second mortgage. So in Chapter 13, we do something called lien stripping. And lien stripping rips that second mortgage right off the house, pays it nothing or as little or very little. And at the end of your Chapter 13, your second mortgage is gone.
It's like an unsecured debt, like
a
credit card debt. See, the whole thing is you have to make sure you have the value of the house has to be less than your first mortgage. Then you can lien strip the second mortgage. That's the threshold test.
That opportunity is slowly eroding based on values of homes.
Another one. People don't know. You can modify a mortgage inside of a Chapter 13 bankruptcy.
A lot of people have reached the point where they've attempted to modify their home on their own, been beaten down, been denied, and now their house is facing a foreclosure. And they have to file a Chapter 13 to stop that foreclosure if they want to keep their home. Well, long term, you're behind on the house. You still think you're entitled to a modification. What we can do is take the time of being in the bankruptcy to compel the lender to modify the house. And we have a court process in place in the Eastern District of Michigan that allows the court to kind of nudge the lender along.
It's an opportunity to get the best of both worlds, and that's what we're always looking for. We want to lower that payment, but we want to get rid of the rest of the debt at the same time. So it's a planning issue. This is one we talk about all the time. Do not bury your head in the sand.
Why not? Won't the world go by and everything will be better?
I guess people people know that that's not the case, but it's such a major problem. Jenny, you see it all the time with the tax problem clients. They've buried their head in the sand for years before they finally come in.
And that's the first thing they always say to me too. I've had my head in the sand for years. It's time to move on and resolve things. And the first thing that they say after they've met with me is, "Wow, why didn't I do this years before?"
I want people to have a visual. Think of an ostrich. An ostrich should not be a role model. You should not try and model and fashion your life after as an ostrich. An ostrich is not what I would call an attractive animal. I don't mean to offend the ostrich community, but it's not what you want to be. You don't want to walk around with your head in the sand. And every problem is solvable, but you can't solve a problem until you face it. Where do we see it? In tax problems, and the other one is facing foreclosure. And that's even worse, because the sooner we intervene to help solve the problem, the easier it is to solve. There are points in time where it becomes too late. If you've already the house has gone to foreclosure, your redemption period's over, you've been evicted from the house, and it's a year later, and you're saying, "Oh, I wish I could get my house back." It ain't going to happen, Sally. It's just not, it's not in the cards. But if you step on the gas and go and try and get help early, you got a chance to take care of something. So you really need to, can't emphasize that enough. And the other one is, and I always like to say, is you can't stop a bullet that's coming at you if you can't see the bullet. You have to know what's coming at you in order to take action to prevent it. So you got to open your mail. The idea, I got a certified letter, I'm not going to open it. Well, how do you know what it says?
Well, the worst is, just because you don't pick up a certified letter doesn't mean that it's not.
Yeah, it's still served.
Yeah.
You still got notice. Next, you must examine tax issues in every financial crisis debt elimination issue. You can't just say, "Oh, there might be tax consequences." This is my Susie Orman comment. I thought most of the things that Susie Orman says over the years are strong, good financial advice, and she's gotten better lately. But back in 2010 and 11, I heard her on television say, "Oh, and you better take a look if there might be tax consequences." Well, you need to look at tax consequences as an integral part of every analysis. When someone comes in to see you on a tax problem, they owe $200,000 in income taxes from 5 years ago. What's the first thing you're thinking about? Are you going to put them in an offer in compromise, or what might you do?
The first thing I would look at is whether they're dischargeable and whether they would qualify for a Chapter 7 bankruptcy, because income taxes are actually dischargeable if they meet certain criteria. If they came due 3 years ago, if they filed them at least 2 years ago, and the last assessment date was 240 days ago. If they meet all of those criteria, then we would start looking at the analysis of whether or not they could just walk away from that debt in a Chapter 7.
Yeah, a lot simpler than going through the time, expense, and the risk of an offer in compromise, because they're not, offer in compromise is a good thing, but it's not as good as discharging the taxes in bankruptcy. Some taxes are dischargeable, some taxes are not.
Just as important is avoiding the taxes because you're filing a bankruptcy. In this case, if you have a whole bunch of credit card debt and you decided to do debt resolution, and in your Susie Orman situation, if she doesn't tell you that, by the way, forgiveness of debt may be a taxable event. Depends on whether you're solvent.
Well, she does, but she doesn't tell you when it's a taxable event.
Depends on whether you're solvent, depends on whether or not it's a bankruptcy related. In bankruptcy, it's never a taxable event. So you never pay taxes on debt that's forgiven.
And if you don't qualify for a bankruptcy and you're going to do debt resolution or you're going to do a short sale, you need to take into account evaluating the tax consequences to decide, is this the right thing to do? It doesn't mean don't do it, but you certainly don't do something and then wait a year later the accountant says, "Oh, by the way, you owe all this money in taxes." That's the last thing you want to do. We'll be back after the break.
Are you struggling to pay your mortgage? Afraid of foreclosure and the financial mess it can cause? Time is not on your side. Call Alan Stalter, the short sale specialist. For years, Alan has been helping distressed homeowners navigate through the short sale process. His experience will get you out of your home without the credit score damage that follows foreclosure. If you want a fresh start, you need to call Alan Stalter, the short sale specialist, 248-854-3829, or MetroDetroitShortSale.com.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
Worth Ave Gross. Our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call Thav Gross.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call Thav Gross today, 888-235-HELP.
Going from hourly to salary seemed like a good career move, but now you're working 60 hours a week instead of 40, and you aren't getting paid any of that extra time. You're stuck, right? Wrong. You can be on salary and still be entitled to overtime. If you've been wrongly denied such pay, you may be entitled to that and more. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
If you're retired and in a financial crisis, there is a way out.
It pains me when I see a retired couple exhaust their savings by paying credit card bills and for a home hopelessly underwater.
Thav Gross specializes in helping retired people in financial crisis.
You just can't keep paying until you're broke. You need to address the problem now.
888-235-HELP. That's 888-235-HELP.
Worth Ave Gross. Our firm will solve your problem.
All right, welcome back. Let's do some quick announcements. We have a seminar coming up soon, September 10th. Get serious about debt elimination. We really evaluate all of the issues from the perspective of preserving future income for you and your family. I don't even think in terms of someone says, well, I've got a debt problem. I don't view it as a debt problem. I view it as a quality of life issue that you need to manage your finances so that you're saving money. It's not a question of I'm broke. It's a question of if you have decent income, but you're not putting away $500 to $1,000 a month in savings, so that money, preferably tax deferred, so that money can accumulate so you have a retirement at the end game, you're making a mistake. You're not going to be able to live on Social Security alone when you get to 75. We see people coming in all the time. If all they have is Social Security, they have no pension, their rent and their utilities costs more than their Social Security check. They either have to live with their kids or they're on the street. You don't want to be in that situation. And if you're wasting your resources by paying excessive interest on credit card debt for 20, 30 years, you're throwing your future away. The seminar addresses those issues. September 10th, 7 to 8:30. Sign up, financialcrisistalkcenter.com or thavgross.com, or call 888-235-HELP. I want to thank our sponsors, Gold Star Law, Samasco Law, Elite REO Services, Alan Stalter, Trips Auto Shop and Collision Center in Jackson and Lansing, U.S. Staffing in Jackson and Lansing. We have a special report called Reg X, The Hidden Secrets. If you're facing foreclosure or you want to know about the foreclosure process and how you slow it down and can seek a loan modification and what your rights are, you want to download that report, go to regxhomesaver.com. All right, back to our issues with regard to what we've learned over the last 6 years in doing the Financial Crisis Talk Center. There are several solutions to tax problems other than an offer and compromise. Now, offer and compromise, Jenny, you deal with it all the time, and it's always what people hear about on TV. It's a good program, but it doesn't always work, right?
That's correct. It's a math calculation, so you're either going to qualify or you're not going to qualify.
And it depends on, we have to do some planning to make that work sometimes, but if you have too much assets, if you've got $200,000 in your 401k, you don't get to keep the $200,000 in offer and compromise, right?
That's correct. They're going to look at any assets that you can make liquid. They're going to look at any assets that you have had within the last 3 years that you dissipated, along with an income and expense analysis. So we also look at, in addition to the offer and compromise, we'll look at bankruptcy, we'll look at installment agreements, we'll look at uncollectible. There's a lot of other things, maybe penalty abatement, maybe they were audited and maybe they don't owe the money. There's a lot of different options.
So you've got options that need to be examined, and it's not always, it always comes back to the same thing. You need to do analysis in order to make sure the thing, you're placed in the right situation to address the problem in a smart way. Next one, unless you examine all of the options, you're going to end up talking to someone who's biased to their one solution. This, to me, is what we really made an inroad and a change in financial crisis management. The difference is, if you go to just a bankruptcy attorney, he wants to put you in a bankruptcy. If you go to the debt settlement guy, he's not going to even evaluate whether you could do better in a bankruptcy. He's going to want to sell you debt settlement. If you call the tax guy, he's going to want to put you in offer and compromise, where you might be able to resolve the tax problem by going to Brian. If you could get him not to be on his texting on his phone for a minute, and you could get Brian to examine whether or not the taxes are dischargeable in a bankruptcy. So it's always a question. I couldn't resist. It's always a question of trying to. I'm going to take that. What happened? I know you don't have that phone with you when you're in bankruptcy court, because the judge will take it with a hammer and smash it.
True enough.
And then he'll give it back to you.
But my daughter is texting me.
I'm shocked.
So I was just responding, telling her that I was on the radio and I would call her in 10 minutes.
Going back to what you're like 4 shades of red.
Yeah, I know.
Okay. Going back to the right person. It's if one person is pushing you in one direction, you should resist that. You need to evaluate all of the options. It always comes back to this. The lady who came into me after one of our seminars and says, I want you to settle all my credit card debt. I got $40,000 of credit card debt. I don't want to file bankruptcy. She was making she had $2,500 a month coming in on Social Security. She had no other assets. I said to her, if you had $15,000, I could settle your credit card debt for you, and it would cost you, in addition to that, $2,200 in legal fees. I said, but for $1,500, you are perfect eligible for a Chapter 7 bankruptcy, and it's done right away, and then you get to save the other $13,500. Which would you rather have? And she looks at me and she says, well, I suppose it would be a lot smarter to do the bankruptcy. And I said, yes. I walked her down, if you remember that.
Yeah.
Brian filed the bankruptcy the next day. It was a simple case. I don't think it was $1,500 in legal fees. It was less because the case was so simple.
You know, the bottom line is that you have to explore all of your opportunities. And if you go someplace that they only do one thing, you're only going to walk out with one product and one opportunity. And that opportunity sometimes is the wrong opportunity.
You
want to know everything.
You don't want to get ripped off. The national firms are about getting your credit card number and getting money from you. You need to deal with people locally. It doesn't have to be us, but it has to be somebody. I think it should be us, but it has to be somebody who's local in your community, that sits across you at a table and cares about you. If they don't care about you, you need someone else to be looking out for you. Have a great week. We'll be back next week with Law and Reality.